Alright everyone, so if you are someone that is currently having trouble figuring out which order block to use, then this video is for you. Let's begin. Alright everyone, so as always I have a few little disclaimers here. So number one is nothing is 100% fail proof just because you have all the confluences known to trading. That's pretty self-explanatory, right? Number two, it's okay if your order block doesn't always get tapped or isn't respected. So what I mean by getting tapped is some of you guys might have a limit order set on the order block and sometimes price doesn't tap into it. That's perfectly fine. It's normal. Like I said, you can have all the confluence in the world, but that doesn't guarantee you a win. Okay, it does not guarantee you a win. Now what I mean by it's okay if it isn't respected is, let's say price breaks through your order block and sadly you might get stopped out because you had a limit order there, or just simply the order block wasn't respected. Okay, it's okay, it's normal, it happens in trading. All right, and number three, back test. Why do I emphasize backtesting so much? It's because the more chart time you get, the better you're going to be at trading in real life conditions. The more you'll realize that sometimes not getting tapped in or having certain order blocks getting disrespected is just part of the game. And there's just so much stuff you can learn by backtesting. So please guys, backtest. Now, let's move on to the good stuff. Okay, so for this section, I am going to talk about what we already know as traders, or at least things that you should already know when it comes to looking for the right order blocks, right? So I'm going to go through a couple of things real quick, but these are just things that you guys should already have in mind or should already have as part of your trading plan, or at least have known about it. Okay, so pay very close attention. Let's begin. All right, so as we already know, some of you know that we must have liquidity, right? So here's a little bit of liquidity here, and I've already made a video about inducement and liquidity, so you can all go and check that out. I'll try to link it down in the description below. But yeah guys, sometimes having liquidity can help you find the correct order block, as well as having a fair value gap or an imbalance, right? That's another way that you could confirm that you have a high probability order block. Now I actually have another example here for you. Volume in fair value gaps or volume in your imbalances, as well as having volume in your order blocks. So I already have some indicators that I have shared with you guys in the past, but I will share them in the description below as well. And sometimes having that volume can actually help you narrow down which fair value gap or which order block to choose from. So just keep that in mind if you haven't tried it. Next is fib levels. Now it can be any fib levels that you want. I'm just using this as an example, but sometimes having Fibonacci levels near your order blocks can help you confirm or give you an even higher probability, or at least just some sort of comfort that says, hey, since this order block was found near my Fibonacci level or right at it, I can feel a little more comfortable waiting for price to enter, and if I see a reaction off of it, then I'll enter off of there, right? And same thing here, right? So when you have time-based order blocks, and what I mean is maybe you're trading a kill zone, or an order block happens to form in a kill zone or in a macro. That is also another way that you can find high probability order blocks. Okay, so if you haven't tried that, you can also test that out. I think it's pretty cool, but if you're not familiar with ICT, then the macros part might be a little difficult to understand. I'll try to make a video explaining macros in the future. But yeah guys, it doesn't have to be macros specifically. It can also be kill zones. Now for my last few little examples here, it's also good to have higher time frame order blocks. So let's say on the lower time frame you have a small little order block, but you go up to a higher time frame, you realize that with these two combined, that'll make an even bigger order block. And sometimes even having fair value gaps on a higher time frame combined, you'll realize that it's a little easier for price to reach into it, especially if you're not sure which fair value gap to choose from. So as you can see here, we have a few little fair value gaps inside this higher time frame fair value gap. So instead of having to refine your order blocks for fair value gaps, keep it the way it is, as long as it's not extremely big and you see that it's manageable, then just keep it. It'll be fine. All right, so yeah guys, try it out. Open up the charts, see if you can find any trades that you have missed or maybe didn't get tapped into, and see if maybe going up a higher time frame would have helped you out in choosing a better area of interest. Okay, so let's move on. All right, now lastly, if you're one of those guys that just love having confluences, right? Some of you might have all of them. You might have an order block during an expansion macro or a kill zone. Maybe that order block has a fair value gap, and both the order block and fair value gap have high volume, and maybe you even have some liquidity there. And it also happens to align with your Fibonacci levels, right? You can have it all. And maybe, just maybe, that might not even be enough for you. Because maybe you'll say, oh, well, I had all the confluences known to man, and for some unknown reason, I still keep getting stopped out, or I am not getting tapped into. Why? What can be the solution to this? What is the one last secret that you can give me? Well, I'm going to give it to you right now. Here it is, guys. The secret you've been waiting for. Price action and momentum. Price that moves with speed, volume, and direction. So maybe, just maybe, you have a couple of order blocks and you'll realize that once price taps into it, what is the most common thing that you see when price taps into an order block that actually ends up being respected and ends up being a profitable trade, right? You'll notice price action. You'll notice price reversing with some momentum, maybe with some speed or some good direction towards the opposite side or the continuation, right? And as you can see in this example, we have a high volumized candle, big engulfing order block reacting off of this one right here, right? So it doesn't matter. You don't have to have all the confluences in the world. As long as you have something like this can give you a real good edge. Now, here's another example where you can enter at the breakup structure or at the retracement afterwards. So let's say you're looking at price action, or you're waiting to see for price to actually confirm that this order block is being respected on the smaller time frame, because I actually zoomed in on a smaller time frame. This is the same thing, but I zoomed down on a lower time frame. So let's say you're waiting for a change of character or breakup structure, whatever you want to call it, and you're seeing that price goes up, comes back down, retraces into a fair value gap or order block or a breaker block, whatever you want to use, and then you decide, you know what, I'm going to enter from there. Why? Because I saw a change of character or a breakup structure, and I'm noticing that it's respecting this higher time frame order block or the order block on the lower time frame, whatever it is that you're trading on, and I'm good. That's more than enough for me. Guys, watching how price reacts off of your points of interest, it doesn't have to be specifically an order block. It can be a fair value gap or a volume imbalance, whatever. Just watch how price reacts. See if you can find momentum. See if you can find volume. If you have a bunch of order blocks and you just don't know which one to choose, just see what price does while it's reacting to them, right? If you're seeing that no, there's not enough momentum, maybe the candles aren't big enough, maybe there's not enough direction, not enough speed, whatever the case may be, then don't enter. Simple as that. Don't enter. Wait until you see maybe something like this, right? Like a change of character, maybe one or two breaks of structure, something like that. If you do that, you'll avoid a lot of losses. But remember, every now and then you might have to sacrifice your risk to reward because you might be entering a little late, okay? But if you're smart enough and you can make a good trading plan, maybe your risk to reward won't have to suffer so much. Okay, now I'm going to jump onto the charts and show you a little bit of a back testing example. All right. Okay, so obviously I cherry picked the example, guys. I'm not going to try to waste my time trying to figure which one is this and that. I want to make this as quick as possible. Okay, so let's say for the first order block, okay, you might say, oh, well, I have a fair value gap here. Price surely would tap here instead of going all the way down here, considering we're trading with the trend. And it's very possible, guys. It's very possible. I have seen, and I'm pretty sure you all have seen, times where you've had some really good liquidity resting over this order block or over your order block or your demand zone, and price just doesn't tap into it. All right, so sometimes a fair value gap is more than enough. There are times when that happens. So I'm gonna let you guys choose. If you want, you can pause the video and choose which one you think will be the one that gets tapped into. Okay, you can pause it and then we can move on. So if you paused it, we're gonna let price play out and we're gonna see how I would read the market. Okay, so here comes price. Okay, what does price do? Come down, reject fairly quick off of the fair value gap and the order block. But notice how price, or these two candles, kind of struggled to sort of move away from this area. And yeah, even though we have an engulfing candle here, it's still not a strong enough candle. Why? Because there's wicks on both ends. If it was a strong price reaction, normally you wouldn't really have wicks on either end, or maybe on just the bottom end. So normally you would see something like this. Okay, something like this. That is a great reaction. Okay, but in this case, I'm gonna maybe wait a little bit and see what price gives me. Now look at that, strong engulfing candle with very minimal wicks. So that's not a good sign. And as you can see, price is sort of consolidating. So we're just gonna let price do its thing. Still not enough. Barely, didn't even close over this candle right here. So very, very short price action, not very good. And what happened? We got violated. So let's see what price decides to do. Okay, taps into it. Look, no bottom wick. Okay, we're gonna see what happens. Oh, okay. So what do we have here? Big candles. The wicks are fairly small, and the next candle is actually fairly big, and it closed over it too. So if you want, you could also enter off of here because you're seeing some nice price action. And if you want, you can target this high. I'm not saying you should always target those highs, but in this example, we're targeting those highs. So we're letting price play out. And this is on US oil, guys, by the way, on the 5-minute. And wow, look at that. And like I said, you can wait for some kind of retracement, and you can enter at the retracement. So you could have entered here, retraced into this fair value gap, which could have also been another re-entry for you. Or you could have entered at this small break of structure here. You could have entered there as well and set their stop loss at the bottom of these candles as bodies or the wick. And maybe you could go in this case for a 1 to 2 if you want, or 1.24. And what does price do? Keep climbing, it keep climbing. And always trade pro trend, guys, for these things to work out. Bam, barely hit TP. But yeah, guys, as you can see, we had this little break of structure here. You could have entered off of that, but notice how I used price action, the bodies, the wicks, everything that's telling me, okay, what is the movement? What is the next move? How should I approach this? Now, I'm not going to sit here and pretend that I can always predict price. You know, I'm gonna leave them up. That I could always predict price very well, that I can read the bodies very well. No, guys, I'm not gonna pretend like I can. Every now and then I will get into a trade because I thought I read price action correctly and it ends up being a loss, but that doesn't happen all the time. Doing this actually reduces my risk by a lot, and it can reduce it as well for you. So if you want, you can practice this, see if it works out for you. Maybe this is the key that you needed, the piece that was missing. You can give it a shot, especially if you're on the lower time frames. Like waiting for like a change of character, a break of structure, and then a retracement into a fair value gap or an order block can really save you. Okay, because if you're trading on the lower time frame, you need more data. Remember, if you're something on like the 1 minute, each candle is only 1 minute worth of data. So it's not very much data. It's not really that reliable, especially if you're looking at like one candlestick, like an engulfing candle. It's not that reliable. You need more data to make sure that you're not going to get screwed over. And even then, again, this is not 100% foolproof or fail proof. All right. So with that being said, guys, I think this is the end for this section. Let me just finish it off real quick. Alright, so I hope you enjoyed that little back testing session. I hope that you practice it and not just look at it, Please practice it. Please, please, for anyone that didn't watch my previous video, don't add my stuff to a random general playlist. Make a specific playlist for my content, because I'm telling you, you're probably not even going to watch it again after you save it. And I'm pretty sure you already have a ton of videos in that general playlist. So please, guys, do me a favor, save my stuff on a specific playlist under my specific name or channel. I would greatly appreciate it. Thank you. Now, obviously, before I go, I got a little biblical wisdom as always from Matthew 5:7, and it's blessed or blessed, I don't know, however you want to read that. Blessed are the merciful, for they shall receive mercy. I don't know whose verse this was for, but I kind of relate to this in a sense, because there was a time where I wish someone would have been merciful enough to at least guided me in the right direction, whether it was in trading or in life, and just not being a complete animal about it, because we all need help. We all need a little bit of mercy, and that's kind of why I'm doing this, guys. This is why I give my content for free. I mean, I'm telling you, the things that I'm showing you, you guys should be paying for. Like, let's just be honest. No other content creator, even the ones that do sell you courses, don't make them as good as this. Okay, so with that being said, guys, thank you guys so much. I hope to see you guys in the next one, and as always, I'm praying for y'all, and I'll talk to you guys soon. Peace.